The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And those of you that were watching Tiger TV yesterday, I happened to be in Clearwater here, Florida, visiting Tom and the folks at the office. And Tom coerced me into a bet that if the bonds got to 160, I would take a ride in a sailboat. And the only way I'm going in a sailboat, folks, is in a little plastic container after the crematorium. So that's the only way that's going to happen. However, if you are in the Clearwater area, there is an Italian deli there to die for. Platterotti's on Gulf to Bay Boulevard around 16th Street, I think, has some of the greatest Italian stuff I've ever seen. It's just like I was there with my grandmother. And, just was really fantastic. And I enjoyed meeting him. And if you do have a chance to like Italian food and Italian deli, he's got some of the greatest cheeses and salamis and olives and olive oil. And he has baskets, too. And not only that, but he gave me $50 to do this commercial in cash. So who loves you, Salvatore? Anyway, we really had a wonderful time. So it was one of the highlights of the trip. So the thing that we want to watch today is I posted a chart into Tiger TV. It is a chart on the 30-minute chart on gold, and it is completing a bearish-Gartley pattern up here at the 1623 level. And all I'm doing is trying to give you an idea of the time frames that we deal with when we're trading as a professional. Now, on July the 11th, I'm going to be doing a webinar, and what I plan to do is to show, how we take the dailies and the 5-minute and the 30-minute and put them together for risk control. If you remember when we were talking about natural gas on our last show on Monday, we certainly wanted to wait, and that's exactly what we did. And later in the show, I'm going to show the scenario of natural gas and why the waiting was the best thing to do. And if you waited, you were able to get in at a much better place, and we will take a look at that and give you an idea. These are the types of things that I'm going to be covering, on that July 11th webinar. They've got some great programs coming in, folks, so if you want to learn a few things, Tom's made it really easy to get into the program to get some of these things, and it's really a good deal in my opinion, and I'm looking forward to kicking the thing off, and it should be a lot of fun. Now today, what I want to focus on is astrology stuff, because I'm getting a lot of inquiries about the Bradley model and other things, and all I'm going to try to do is to give you an idea of what you're looking at when you're watching some of these things astrologically, because they are nothing more than numbers. That's really all it is. The chart that I'm going to post into Tiger TV is going to be that chart of Venus going retrograde, and that's something that we've talked about before. It's a cycle that happens. Venus goes retrograde about every 18 months, and when that happens, we have a time frame where we are, just in a period of really, tough choppiness, I guess, would be the thing, up and down. If you go look to see during these periods of times, and they last about 40 days between the time that Mercury goes, retrograde, Venus goes retrograde, and that's what we're going to be talking about today, because it's a relatively important thing, I believe. And if we take a look at it, you'll see that during the time of May the 15th of 2012 until June 27th of 2012, this is what we have a period of Venus going retrograde. Now, what that means is that the planet Venus, being the second farthest away from the sun, Mercury being the closest, and then we have Venus, and then we have the Earth. And what it does, it swings back and forth between the sun, and when it goes one direction a little bit too far, it looks like it's going backwards, and that's where it comes retrograde motion. It's not really going backwards, but that's what they look like. And traditional astrologers, they equate that with some things that are happening, and they have a lot of different things that are occurring, as far as metaphysical things that I really don't go into those things with the zodiac, as far as whether you're a Gemini, or a Sagittarius, or what sign you were born under. That's mundane astrology, and I really don't cover that. I'm basically interested in the numbers. And the chart that we have today was a benefit of one of our, den members, Robert Lemon, and he did a really good job of looking at this. And I went back and, did some other work on it, as did Steve Rhodes. And you can see that some of these things, really are coming together. Now, I really think that we're probing for a bottom here in stocks. I heard Basil on the last hour. He said also that it looked like the market wanted to bottom in here. I'm assuming that we might get one more spike down into that June 19th to 20th level. That is an area that is pretty important next week, and then we will have better information of where we are. But we could just go up from here. I don't think that we will, but we certainly could. The reason why I posted the chart on the gold was because I wanted to show the relationship to the type of time frame that we're going to be dealing with, when you're doing actual trading. Because when you're trading, you want to try to get your risk to the smallest amount possible. If you remember on Monday's show, we talked about natural gas, and it was trading at 222, and I said it didn't look like it wanted to hold. It was best to wait. And you waited 1 or 2 days, you got a really good chance of buying it at a better price, and we'll cover that, a little bit later. But mainly the first part of the show, I wanted to talk about some of these astro things that occur, because they're just really numbers. When Venus is in retrograde, you're looking at a 40-day cycle that happens every 18 months. And it's predictable, because if you go back and look at the time frame of doing this stuff, it's going to be pretty accurate as far as, when the markets are getting ready to turn. It's far from perfect, but it's better than any of the economists out there like Stiglitz or Robini or Kaufman or, some of these other guys. I mean, it's just really amazing how some of these little cycles work, and that's all they are. They're just little cycles. Someone asked a question about the blue moon cycle. A blue moon is nothing more than 2 full moons in 1 month, and that also happens every 18 months. So everything that we're dealing with here is related to these cycles that are related to days. Now, we're all familiar with Tom Pelk's work when he was at the Royal Bank of Scotland, RBS. He wrote about the full moon, buying on the new moon and selling on the full moon over an 88-year period. Did something like 16 times better than just being in the S&P and holding. And so Tom moved on to Nomura Securities in London, in their big office right off the big river there. I think it's called the Thane. I'm not sure. Yeah, I guess that's it. I don't remember exactly, but he's overlooking the river, and it's really a beautiful, real office up there. He's a really pleasant fellow. We spent the day together. We talked a lot about the astrology things, and I was just speaking with him recently. And he was telling me that there are firms in London that are really researching, the astroharmonics, that are in the market. Not just the lunar things, but the things that were related to the, the 2 inner planets, which are, Mercury and Venus, which are, the ones that can combine for combust 4 times a year. So these are the things that we're looking at. They're number related. I'm going to cover these in the webinar on July the 11th to try to give you an idea of where they come from, and not make it too complicated for anybody to understand. But that's what we'll be shooting for as we go into that webinar. But it'll be basically about trading, how I actually set up trades for the hedge fund, and how we look at daily charts and how we look at 60-minute charts, and then we move down to a smaller time frame, and how we use dojis and how we use tweezers and things like that, just little things that will give you an idea. And then also the importance of these wide-ranging bars that can be really dangerous, and how you want to stay away from those. That's the epitome of trying to catch a falling knife, or trying to catch a falling safe. You want to wait till the safe hits the ground, breaks open, and then pick up the money. And that's what you're trying to do in trading. It's not about how much money you make, it's about how much money you risk. And once people realize that, they're far better off, than if they, try to, do it the other way. I don't think there's any question about that. That's been proven by many people, over the years. So the next part of our program here, after we're going to coming up to a break here, I think really closely, I want to go through a few of the charts that we've been watching. I'm going to go to natural gas first, just to show you the setup that we were talking about last Monday and why we should wait. I remember we wanted to discuss that on today's program, and that's what we're going to do, is just show you the scenario of why we wanted to wait. And it was just a matter of using some common sense along with some of these ratios and patterns. And, that's primarily what you're trying to do, is to get the odds in your favor. If you have any questions, you can call in at 877-927-6648. And I still believe that we are going to be in a real choppy market now, between where we are right now into probably late July, maybe even early August. But when we get there, we'll know. But I'll change my mind if we break down from here, or if we explode up from this level. Then I will certainly change my mind and look at something a little different. But right now, as it looks, we have a spot where we think we should be, doing the right thing, and just trying to catch the swings, as they actually occur. So remember, it's all about risk control. It's not about how much money you want to make. It's about how much money you don't want to lose. And you want to think like that slot machine. Just realize that you have no chance of beating that slot machine. So you want to be the slot machine. You want to be the person that can't be beat. The only way you can't be beat is if you control your risk. And the important part of that is learning how to manage risk, and that's what I'm going to try to do in the webinar that we have on July the 11th. He's got a great setup there, Tom, for all these different webinars with everybody. It's great information at a very, very meager price. We've got a break here, folks. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and what I wanted to do is to go right into that natural gas trade. Not just because, I know very few people trade natural gas. The reason why we're doing this is to show you how to set up risk control. That's what we were talking about Monday. The market had came down to the exact 61% retracement at that 222 level, but it went below it, and then it had a little bit of a rally, then went below it again, and my assumption is that we should wait several days just to see if we could get a better entry, into that particular market, and that's pretty much what's happened. We've held up relatively well at this level. We're not very far away from the 222, but it's still at a spot where it could have gone the other way. And, we certainly want to, didn't want that to happen. So what I'm going to do now is I'm going to post into the Tiger TV. I'm going to break this down into a 30-minute chart, over the last 7 or 8 days. And as you can see, we made a really nice butterfly pattern, 2 cents below where our 222 level came in. Actually, it was 4 cents below. And then you'll notice that we had a really strong rally where it rallied about 6 cents, and it rallied right up to the exact 61% retracement back to the 222 level, and now it's backed off again and is trying to make a double bottom down in this level. Now, the choice that you had is if you really wanted to be in the crude oil and risk very, very little, you could have bought at that butterfly pattern down at the 218 level and change, or you could have waited till the pullback that we had today and buy it at around the 219. Now, you see what we've done now is we've reduced our risk from 2 to 3 cents per cubic feet down to about a penny per cubic feet, and that drops our risk in half. And that's what you're trying to do. You're trying to focus on keeping your risk as small as possible and still have the opportunity, to get in a trade that you see it happen. The question someone asked me, but said, how do you know that it's going to hit that 618 on the daily and stop and just turn from there? We don't know that. The only thing we have to do is we have to watch as it gets to that level. And what we were doing is we were seeing that it was going below the 222 per cubic feet level, and that was telling us it was probably going to a little bit lower low. So then what you do is you go down to a smaller time frame, i.e. 30 minutes, which is certainly acceptable for trading, and you're able to put your risk control at a much better spot. And that's what the trading is about. It's not about how much you win, it's how much you don't lose. And that's the bottom line of what we're really trying to accomplish here. Someone brought up a question about the P index date that we were talking about on June the 6th. Frankly, folks, I don't know. I was expecting the low to come in on June the 6th. The low came in on the full moon and the lunar eclipse of the 4th. The June 6th happened to be the largest single update we've had this year. So that's probably, without doubt, a significant low in the market, and so I would assume that might be a low. But frankly, it's off by more than 2 days, so I view it as a failure. Now, I could be wrong doing that, but that's just my statistical, upbringing that Dr. Miller, drove into my head for so many years. But by the way, her birthday's next week, and she's going to be 89 years old. And as a matter of fact, I think I'm going to send her some of these wonderful olives from Plateratis, because they were some of the best olives I've ever had in my whole life. I keep going back to the advertisement, Sal, if you're listening, so you can toss me another $50 when I drive past again. That was a joke, folks. Anyway, the olives were green olives, and oh my God, they were just the best ever. Okay, let's get away from food. Food is tomorrow. We got the commodity show tomorrow. We'll talk more about olives and French bread, and we'll talk about pasta and other things on the commodity show tomorrow. But today we got to focus on the stock market. We've had the big rally up in stocks. We had a pretty good move to the downside. We've held that level, and we're just in a trading range now between that 1339 level and the 1300 level. That's basically what we're doing now. Ideally, we will talk more about this after the break, but ideally what we'd like to see is the market to come down hard into early next week. Some really bad news, hard down into early next week, and then we got a chance to set up a pretty good rally, because that would be our third test. Anyway, we're going to take a little break, 877-927-6648. When we get back, we're going to discuss the stocks at length, including the Bradley model and some bonds.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we're back with the TFNN program this afternoon. I'm Larry Pesavento. Any questions? 877-927-6648. And now comes the hard part. I posted in the Bradley model on the daily basis, and what my assumption is going to happen over the next 4 or 5 trading days. I believe we've got a chance to come down one more time hard into the somewhere between the 18th and the 20th, which is the Bradley date. And then after that, if you'll notice into Tiger TV, you'll see that the Bradley model does point up into early August, and it could be late July, early August if it does top. But that just means that the negativity that has been going on since late April, in fact, they started in March, late April, and down all through May, has started to abate a little bit. All that means is the cycles that are there have become less negative. That's what it means. Now, there's a possibility that this thing could just melt down from here and that it's inverted, but right now it's been following, what it's supposed to be doing. And that's it. Now, we have the Greek elections coming up, I believe, sometime around that point next week, around the 17th. I don't think those elections are going to mean very much. They pretty much know what's going to happen over there, folks. That's just my guess. They've known about these things in Spain and Portugal and Italy and Iceland and all these other things. I mean, it's a major debt liquidation. They just try to take care of this stuff by adding more debt. And it's really, not the right thing to do. And that, of course, that's my opinion, and because I have a radio show here, I'm entitled to my opinion. I actually tried to listen to Rush Limbaugh for the first time over the last few days to maybe get some ideas to spice up the program a little bit. But when I heard him, I said, "Oh my God!" I know of his politics, but boy, that guy is really. He's really quite abrasive at times, so I certainly don't want to be that way because I know I'm wrong a lot, and I try to be right some of the time, and that's what we're trying to do. The next thing that we need to talk about are the Treasury bonds, because they keep with the market holding up here. The bonds are selling off. Basil mentioned that if they go below the 144 level, that's going to trigger a major, sell signal in the bonds. Frankly, the bonds' open interest is still going down. Players are leaving the market. Yesterday, PIMCO, Bill Gross announced that they were adding 25% more, bonds to their portfolio. And just because they say they're adding 25% to their portfolio, take that with a grain of salt. That does not mean any more than what they said it does. It means nothing because they do not tell people when they're moving things around. They're very secretive, and as a matter of fact, trying to, visit an office in PIMCO down in Newport Beach, it's like trying to go into, Virginia at the CIA. I mean, it's really very, very secure, and it should be. These guys have a lot of money. They got billions and billions of dollars, if not trillions, in these markets, and they're certainly not going to tell us, what we're going to do. That's the one thing that we know for sure. All we're trying to do is to look at the charts, find a pattern that looks like it's going to give us a pretty good shot at being more right than wrong, and that's what we're looking for. Before we get to the Treasury bonds, I wanted to go in and take a look at the U.S. dollar because we have been coming down nicely from that ABCD pattern that we looked at more than a week or so ago, and we're still looking for the 80 level is what we're looking for in the dollar index. That would be the ideal spot for the dollar index to come down to. That would be about a 61% retracement off of the last swing that we had, and that's the ideal place. It comes in at around 80-70 would be the 61% retracement. So if we do get to that level, then I would assume that the euro is going to be up a little bit higher, than where it is. And believe me, the euro hit some really strong resistance up there that we mentioned on Monday. Because it hit it Sunday night real early at that 126.70 level. We backed off 200 pips, since that level, and then we've come back a little bit more than the 618 retracement. We hit the 786 retracement in that euro on the downside, and so that's the thing that makes us really watch this is because we have a situation where the U.S. dollar index is 53% euro, and so you must watch it, very, very closely. And we will show in the Tiger TV, where we are with the euro and the action that we've had over the last few days. You'll see that we've completed a 786 retracement level here in just recently, and what we'll be looking for now is to see if it can get above this 126 level. This is going to be really important. Okay, now the British pound, we mentioned several times on Monday that 152 level was just absolutely incredibly important, and we needed to see that it stayed above that, and it certainly has stayed above that level more than enough because we've had a pretty good rally, in the British pound, and it did it with very bad news coming out of the UK. So that's another thing that you need to watch is how the market reacts to the news, and that gives you an idea that that if the news is bad and the market goes up, folks, the news doesn't mean anything. And if the market goes down, the news is good. The news just meant that it was not nearly good enough. That's basically all it means. That's the only advantage of being a technician, is that if the prices go up, there's more buyers. If prices go down, there's more sellers. And you don't have to worry about what they're trying to tell you as far as whether you're going to be, listening to the information that they're going to be trying to give you as far as the amount of bullishness or bearishness that you have to expect, on this. Now, we have another situation here that is really very, very important for all these that we talked about Monday, and that's in the crude oil market, because our crude oil market has held up at the 81 level several days ago. We hit that 82 level. We went below it, and then we had a really strong rally, and then we came down and made a new low off of that, and then we came back above it. So the market is really trying to hold the 786 retracement off of that last September low. And it's important that we stay above, the 82 level on a closing basis. Now, we've come down and we've closed right at that level several times, but, we really haven't penetrated it to the downside. And so this is, we believe in, if the deflation is coming, it's going to be hit really badly in the crude oil, much like we had in 2007, 2008, and that's that would tell us that the market is going to go down a little bit lower. Someone asked me a question: do I follow all this stuff that's going on in Greece and Spain and all those things? Frankly, folks, I really try to repeat myself over and over again, but I listen to the news sometimes, in between a weather report or, NCIS or CSI Miami or, some of the shows that I like to watch, History Channel and stuff. But, really those guys don't know any more than anybody else. They're just giving you assumption that they have to put people into into FNN. Oh, I got in trouble that time. They have to put people into Bloomberg and CNBC and probably TFNN also, to make up some, interesting information. And all my information is, what I try to do is base it on, what I see, in the charts. And it's hard to be a pure technician because, people say, well, why? Well, why? Well, why? And I don't know why, and I don't care why. All I'm interested in is, what happens when the market gets some news. Is the market going to go up or is the market going to go down? And then I look for the pattern, to try to tell me is if I can make a buck off of it. I'm very pragmatic. If I can make $1 off of it, I'll continue to use it. But, if it stops working, I guess I'll go back to, using something, using something else, either point and figure or Stottlemyre's work on volume distribution. I don't remember exactly what they call that, but I could never see how that worked. But just basically it's just risk control is what you're looking about. I like this business because every day is a little different. We always have you have a little bit of bullishness one day, a little bit of bearishness the next, and it gives you plenty of opportunities to get in. Remember the old adage that I've talked to you about that I learned at Drexel. If you go long, you lose money, and if you go short, you lose money, and if you don't trade, you miss a heck of an opportunity. And what you want to do is to make sure you get your opportunities on the right side, and when you lose a very, very small amount, and when you win more than you lose. That's the secret of our business. It's not a business of being right or wrong. It's a business of making money. That's the secret to what we do here. Now, we need to talk about the bond market here. We have had a lot of selling coming into bonds in the last 7-8 days. We have dropped down more than we have at any other time since March. In other words, we had a big run up into March, and we've just had a pretty good correction. We were looking for one more rally to come up into that 150 area is what we're looking for. and that's what we're looking for to get short these Treasury bonds. The equivalent to that in the TBT is around $15.30 per share. And if we get that $15.30 per share in the TBT, I would suggest a long position at that time, and then just put a stop at $14.30. And that would mean that if you got stopped out, the bonds would go above 155, and then we're getting close to the 160 level, which means that I'd be getting close to taking a ride on a sailboat, which this is not going to happen in my lifetime. So we'll see what happens as we get closer to these numbers. I assume that from what I hear from other people is that everybody's waiting for these Greek elections. Frankly, I don't think it makes any difference. It hasn't made any difference all along. The same thing with Spain. You know, they give them $125 billion, and the market goes way up, and the next thing you know, the market comes way down. So, you know, it's a real difficult spot to really try to, even do anything, like that without, risking an arm and a leg, and you really don't want to try to do that. Someone brought a question to me about the long-term, situation for the stock market. I don't know what the gentleman was talking about as far as long-term. Long-term for me is between Wednesday and Thursday. So I would think that if we're going to go out long-term, we have a potential for the market to rally here, starting sometime around the 18th to 20th of June, and then into early August, late July. And then after that, it gets very bad. If the market follows the Bradley model, and we get this rally into late July, early August, folks, this is going to be the biggest Christmas present one could ask for, because this is the thing that you really want to really focus on as far as a bigger move, because it's been following very nicely since last December. It's not been perfect, but boy, it's certainly been good. And the patterns have helped lead the way. And if we do get that, it's going to be, something pretty good. Now, I thought that we were going to break really badly between the 20th of May after we made that solar eclipse new moon. And that was a buy basis, what Tom Pelk said, buy on the new moon, sell on the full moon. And yet we came down hard into the lunar eclipse on June the 4th, and that would have been a great buying opportunity, but in fact it didn't work out that way. So these are probabilities. That's all they are. They're not certainties, and that's the bottom line of what we're trying to do here when we're watching these. Now, someone asked a question during the other break that we had about Apple, and where I thought Apple was going to go. And Apple has been one of the stronger stocks. It bottomed when it should have way back on the solar eclipse of the 20th with that big ABCD pattern, and then we had a really strong rally, and we got up to the 61% retracement of the high in May. And we'll take a little break here. When we get back, we'll discuss Apple a little bit more.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, getting ready to wind up the show, and we've got a call from Mike in Florida. Are you there, Mike?
Yeah, Bradley. Yeah, Larry. I'm looking at the Bradley model right now.
Yes.
And we, according to the version I had up, we had a major turn date on June the 12th, and I know you said your major turn date is on June the 20th. What's the tolerance as far as plus or minus? What would be the latest that we could get the turn? I mean, do you think it could go out another 2 days to like the 22nd or so, or how? What parameters usually?
Well, when I did the work with Dr. Miller going back, this is going back 20-some years ago, and then we've kept it up since then, and Steve Rhodes, keeps it up also. We know that it has an orb of 1 day on either side. So, like I was looking for the 6th, it came in on the 4th. Some people said that's a spot-on hit, but frankly, the 4th was a much lower low than the 6th, and so I can't really count that. So all I try to do is to get as close as I possibly can, within a day or two. And, but frankly, Mike, this market, they throw a lot of bad news at it, and it doesn't want to go down. This thing really does want to rally. I don't know why. Well, it could be because of the Bradley model, but it looks like it's going to have one more fake out to the upside before it finally does, move to the downside. Just because I said that, it'll probably go straight down, but, it's just handling bad news, very well,
so. Yeah.
that's all I'm looking at. I'm just trying to keep my powder dry here to see what happens over the next 6 weeks. And it's great trading markets. I mean, the volatility is picking up, and that Venus cycle that I brought up about the Venus retrograde is going to mean that we're going to have more volatility, where we're going to have big swings, and that's ideal for what we try to see.
Okay. Thank you very much, Larry.
Thanks for calling in. I hope that answers your question. I know the Bradley model is one of the more difficult things for people to understand, because it's just numbers, and they're just numbers based on whether it's a positive or negative cycle, based on work that was done at Princeton, back in the 1930s, and that was done by Dr. Burr. And what he did is he assigned the positive or negative weights on these planetary cycles based on old traditional astrology coming back from the Babylonians, because you go back about 4,000 or 5,000 BC. This is when astrology was really, going strong. And some of the artifacts that they have, they show these planetary things of Mercury and Venus, and they show the signs of the zodiac. And it's really amazing. Some of the predictions that they've made, through these years. We're learning more and more about it. You've got MIT looking at it, and you've got Princeton looking at it. You've got Nomura Securities looking at it, and a lot of there, and also some people in Japan are doing some important research, as they are in Singapore, and I'm sure they are in China. And it's just numbers. That's all it is. There's nothing to be afraid about it. That's why I tried to show you this thing with the Venus retrograde. It's nothing more than a cycle that happens every 18 months, and it lasts 40 days. And our 40th day ends on June the 27th, which is, right in the middle of this zone of where we think we're going to be, rallying in the stock market. My fondest hope, and the hope is a very, very bad word to use in trading, is that we have one more, really good down move into next week. On a Tuesday or Wednesday would be the best. Mm-hmm. And that would be a pretty good tradable bottom. I put that into the Tiger TV. You'll see that it forms a 3-drive pattern at that time. Right. And now we come to the end. We have the commodity show tomorrow, and we'll be talking more about pasta, olive oil, and gorgonzola cheese, and some of the other more heavily traded commodities. And may God bless all of you.